Money sitting in the bank can earn some more money, depending on interest rates. Over the long term though, my own approach to building a second income is to invest in blue chip shares of proven companies that I hope can pay me dividends. For the patient investor, such an approach can be lucrative. Here is how £20,000 could be used to target a £913 second income each month, on average. Please subscribe my channel for updated financial and tax-related matters. Also be updated with current UK tax changes as we have a lot related to your financial needs. I ought to say up front, by the way, that monthly payout is after 25 years. As I said, this approach is for the patient. It could be used to build a second income stream faster, much faster, in fact, but at a lower level. Different investors will have their own priorities. Although patience is part of the approach, apart from that it does not involve anything particularly demanding beyond the initial investment. My preferred approach is to stick to well-established companies with proven businesses. Sometimes their share prices go nowhere for a long time, but by throwing off lots of spare cash they can fund generous dividends to reward shareholders. If an investor put £20,000 into the stock market and achieved an 8% compound annual growth rate, CAGR, after 25 years it ought to be worth almost £137,000. At an 8% yield, that would equate to £913 a month. That compound annual growth rate could come from either capital gain or dividends. But share prices can go up as well as down and dividends are never guaranteed to last. Clearly, careful selection of shares to buy is important. However, in the current market, I think an 8% CAGR is realistic even while sticking to proven FTSE 100 blue chip shares. As an example, one share I think investors eyeing a second income should consider is FTSE 100 financial services giant Legal & General, LSE, LGEN. The company operates in a market with high demand that I expect to be resilient over time. Thanks to a strong brand, large customer base and deep experience stretching back centuries, it has been consistently profitable in recent years. Still, profits have been lower than before over the past several years and Legal & General has announced plans to grow its annual dividend per share at a lower level. Growth is still growth though, and the yield already stands at 9%. One risk I see is profits falling due to the planned sale of a large American business. Over the long run though, I see Legal & General as a share for investors to consider. This approach to earning a second income is straightforward, but it does require action. A useful first step would be for someone to choose a share dealing account, stocks and shares ISA or share dealing app they can put the £20,000 into, ready to start investing. They can then look for shares to buy and build a second income, diversifying across a few different ones in case some disappoint. The post £20,000 in savings. Here's how it could be used to target a £913 second income each month appeared first on the Motley Fool UK. But what does the head of the Motley Fool's investing team think? Should you invest £1,000 in Legal & General right now? When investing expert Mark Rogers has a stock tip, it can pay to listen. After all, the flagship Motley Fool Share Advisor newsletter he has run for nearly a decade has provided thousands of paying members with top stock recommendations from the UK and US markets. And right now, Mark thinks there are 6 standout stocks that investors should consider buying. Thanks for tuning in. If you found this video valuable, smash that subscribe button and turn on notifications so you never miss out on top-tier content. Your thoughts matter, drop a comment below and let's keep the conversation alive. See you in the next one.